Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Now, well, today is, let me adjust this camera a little bit. Today is October 25th, 2019, and it's a Friday. Welcome to the show. Listen, I'm going to try to explain to you guys about the repo market. I know you guys have heard a lot about the repo market, and you probably don't really know what's going on in this situation. Huge problem. Think of the repo market like a pawn store for banks, like a pawn shop. You know why people go to a pawn shop? They'll slide their gold ring across the counter as collateral, and then they'll get money, Well, this is exactly what's going on in the repo market, but there's a little bit more to it, because the banks, if they have to go to the repo market, to the overnight window to get money, the other banks say, well, gee, that bank, are they in trouble? Why are they just like a person? If a person has to go to the pawn store and sell their ring, people say, well, gee, are they in some sort of financial problems with them? Why are they selling their ring to the pawn store? Same way with the banks. Normally, banks, they can lend money between each other. When a bank needs money, another bank will lend them money. But this shows a huge problem because the repo market, this overnight window, which is like a pawn store, it's being oversubscribed. This means that there's a lot of smaller banks and stuff that now the other banks aren't lending them money anymore. It means interbank lending is either... There's a part of the system there where interbank lending is not working. Like they're being careful about who they lend money to. In other words, banks are not trusting other banks. And so it's just like in a community, if you got a community and the people aren't trusting one another to lend one another money, it means there's money problems in the community. And then a lot of people have to go to the pawn store in order to sell their rings and stuff to get money. There's some sort of a problem in the community. Why are these people all going broke? Why do they need to go to the pawn store and pawn off their rings to get money? Well, this is the same thing happening in the banking community. These banks are running out of liquidity and other banks aren't lending to one another. And this indicates a huge problem at the very core of the financial system right now. It means that the Federal Reserve is actually stopping a disaster within the banking community because liquidity or money is drying up and they're not lending money to one another, institutions. And so the Fed's having to give them this money over the overnight window, and they're having to do it huge. This indicates this is a huge problem within the banks. Everything is not near as good as they're telling us that it is. We are in a financial crisis actually right now, and this is evidence of it. And I think that the Fed is going to be able to get this under control to a certain degree, but it's showing us a much larger systemic problem within the system that I've been talking about for a long time. And it's starting to actually happen now. I mean, I've been talking about this for years, that this kind of problem's going to happen. Now, when problems get worse, and they are going into 2020, problems are going to get a lot worse and a lot faster. I'm actually expecting that it's an entire possibility that when things really start to get bad and the stock market starts to fall off and everything starts to fall off a cliff for the Fed, they're just going to close everything. A lot of these banks are just going to close them. They might close the stock market for a number of weeks or even months. And an awful lot of people out there are just not going to be able to have... They put in what's called capital controls. This is what they do. You can't get your money. Or if you can get your money, it's in a very limited fashion under capital controls. And this is how they will be able to manage the crisis that's coming, But what about you? What about your money in the bank? Well, you are considered what's called an unsecured lender to the bank. When you make a deposit in the bank, you're actually giving them that money. That money belongs to them then at that point in time. So your bank account actually belongs to the bank, doesn't belong to you. And as far as the Federal Deposit Insurance Commission is concerned, they got $30 billion to go around for all of it. Now, you know that these smaller banks and institutions that aren't lending right now have to go to the overnight window. You notice that the Fed's doing like $30 billion just wouldn't even make one afternoon what the Fed's doing. And that's the total of what the Federal Deposit Insurance Commission has available to them to spread to all these institutions. They got $10 trillion on deposit, and they got $30 billion to try to cover it. And there's a second thing to for you as a person that has money in the bank to think about is that $30 billion. The larger depositors and stuff, and the big guys, the big shots, are going to get first crack at that money. And your $1,000 or whatever you got in the bank, $2,000 or $5,000 or whatever, they'll make you jump through hurdles. If your bank goes down, they'll make you jump through hurdles to try to get the Federal Deposit Insurance Commission. You're going to have to go through legalities and stuff. I just know there's going to be a ton. I can just imagine that the burden of proof that you even have that money in the bank is going to be on you. And even if you can prove everything, then there's going to be all kinds of legal documents and everything. You're going to have to sign everything. You probably have to wait months, maybe years. I can just see this being just a total, if it does happen, if your bank goes down, trying to get your money back, I can just see it being a total hassle and taking ages. And then at the end, you might only get a percentage. And by that time, the hyperinflation will have eaten your money away to nothing anyway. So I'm going to tell you, fair warning. Yes, you are insured by the FDIC, but when it comes time for you to actually have to use that insurance, it could be one heck of a total nightmare. Quite seriously. Wouldn't you rather have a couple pieces of silver in your hand? In your hand? When the banks go down? Wouldn't that be much nicer? Okay, let's move on. Let's get the chart started right here, and let's take a look at what's going on. First up, we see the silver price going up today. No surprise to me, because the things I just talked about, an awful lot of people already know, and they're buying into silver. They're buying into gold. Silver's up today. It's looking good. Let me reduce the chart size a little bit here and get it right down on here. $18.21. It's $17 yesterday. It's $18.21 today. It's up 43 cents on the day. Let's take a look at gold. Gold's $15.12. Now, it's moving down a little bit right now, but it could heat up later this afternoon and go up even higher. Let's take a look at cryptocurrency. Now, yesterday I was talking about cryptocurrency, and I said that I thought that I saw a bottom yesterday. And my intuition is about, after you watch charts so many times, you look at so much, after a while your intuition starts to tell you, it starts to talk to you. And my intuition told me that I thought that was the bottom for Bitcoin cryptocurrency. Well, that was at 205 billion yesterday. Now we're up to 210 and climbing again. And we're looking at a Bitcoin price at 76.52. It's still down near the bottom, We're looking at Litecoin at 51.63. It's still down near the bottom. XRP, 28 cents. And Ethereum is $167. So cryptocurrency is looking really good too right today. Dow Jones Industrial Average today. We're up 51 points on the day so far. 26,867 looks like. It looks like it's climbing right now. It's a Teflon market, and as we move into this hyperinflation, as the hyperinflation really gets underway, it is unlimited how high the market can go. But it's all in hyperinflated dollars, so don't ignore it. But anyway, we could see a major fall in the market, major decline in the market when some of the bigger problems in the economy actually hit. But then, they're going to turn it all around. They're going to pump money in like you've never seen before. You never seen the tricks that the central banks can do to try to pump money into this system when this system really starts to roll over. And that's what's going to cause the hyperinflation. Because they can't let it roll over. The system died in 2008. They propped it up. And now it's getting ready to take another keel over, and they're going to prop it up again, but this time it's going to take so much more money. This time confidence is going to be lost in the fiat currencies when they do that. And they don't have any other choice. They have to do that. Because to let it go the other way, now at this point, because they've over-leveraged the system so bad, is absolutely unthinkable. Let's move on with this, and let's take a look now at crude oil, 56.06. We see it maintaining gains that it made for the last 2 or 3 days. It's went up to over $55, and it's holding it, and it's holding that holding pattern today as well. Let's take a look at the U.S. Treasuries today. And we're looking at the long end of the yield curve rising and the short end falling today. And we're not looking at a lot of movement, though. On the long end of the yield curve, we're not even looking at 1 basis point, about a half of a basis point. So it's not much movement in Treasuries today. Not much going on in Treasuries right now. Let's take a look at U.S. dollar index. And the dollar index is 97.72 and holding steady. Now let me talk about the situation in Hong Kong. Hong Kong businesses, right now, they are just trying to survive. I'm reading the numbers here, and it's unbelievable. It's like, I'm reading numbers like 30%, 50% down. It says retail sales in August plunged 23%. The worst, it's the worst drop. Going all the way back into the 1990s. I've never seen nothing like it. Hong Kong, they're just trying to survive the drop in arrivals in Hong Kong plunged 39%. People don't want to go there. Airports are cutting their prices evidently by 50% or whatever. Jewelry stores and typical shops that mainland China would visit have seen a sales collapse by 50%. They're not going to be able to stay in business. Now, this is big. Hong Kong is the hub. China, it's the hub for China. And this is huge. The fact that now the Hong Kong real estate market's probably next could take an absolute huge drop in real estate values. And you know how much money is stored in the Hong Kong real estate market? Oh my gosh, it's unimaginable, guys. And so this situation, could spiral out of control and be another almost like a black swan, having its effect upon the world's financial system. Because Hong Kong is huge. I don't think people out there realize just how big this is. Even though it's one city, it's almost would have the effect of like Italy going down. But there's another subject for another day, Italy going down. They've been keeping Italy going. I don't know how. Italy's sucking up money like a dry sponge sucks up water. And it's basically they're broke. The economy's broke. Everything's broke. Anyway, what a situation we're heading toward coming up very soon. Thank you guys for listening to my show. Give me a thumbs up, and we'll catch you guys in the very next episode. I'll probably do a show this weekend. And we'll see you with another market report on Monday morning. Bye-bye, guys.